Hello and welcome back to Crypto Saving Experts, where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. My name is Jess and we do these live streams every single weekday. So if you are new here, please don't forget to like, subscribe and hit that bell notification button. Today we are talking about what's been going on with Mt. Gox. We'll be taking a look at the prices of the top cryptocurrencies and we'll take a look at what could happen to the Bitcoin ETFs and the applications we've seen from BlackRock, Fidelity and many other companies if we do see a government shutdown on the 1st of October. We'll be explaining what all of that means and the implications it could have on the SEC and how that runs for a couple of days. So we'll be discussing that in just a second. First of all, let's take a look at the price of Bitcoin here. Let's see what's going on. So Bitcoin is currently down 1.16% within the last 24 hours. Was this a buy the rumor, sell the news opportunity? We'll be taking a look at that later in today's stream. We also have Ethereum down slightly, 1.58% within the last 24 hours to $1,602. Now, biggest gainers of the day, we are seeing Elrond up there, up 2.84%. We are also seeing Algorand, Nexo, and 1inch taking the lead there in the last 24 hours. Now, they're not big gains in terms of the cryptocurrency markets, but we are seeing some losses here as well. We've got Rune, we've got HNT, Helium, we've got Zcash, and we've got Toncoin there as well. And we're not seeing mega losses there as well in the cryptocurrency markets. You know what it's like. We can see 20%, 30%, 100% movements within 24 hours on these lists. So the markets have been fairly weak in volatility in the last couple of hours, in the last couple of days, and probably within the last couple of months, we should say. Let's check in with the chat this morning. Monkey Nut says, hi Jess, how was your holiday? It was lovely, thank you. I am back though, back for business, reset and ready to go once again. We did not miss a live stream here. We've not actually missed a live stream on this channel. We started these live streams back in December last year. It's now September. We've not missed a single day. So make sure to like the button, hit that like button for us here, and make sure to subscribe if you have not done already. Let's see what's going on in the cryptocurrency news, or in the general news first of all. So what we have here is, what is a government shutdown and why are we likely to have another one? So it is suspected that we could be seeing a government shutdown on October the 1st, and it is not expected to pass the 12th appropriations bill that funds government operations before the start of the new fiscal year. So why do they happen? This is because we have not seen the 12 appropriation bills being passed in time, essentially. Now, there are some things that continue on and they don't need to be passed every fiscal year. So that is the things that are necessary and that need to continue. Government employees who provide what are deemed essential services, such as air traffic control, law enforcement, continue to work, but don't get paid until Congress takes action to end the shutdown. So essentially, we could be seeing the government basically go down to what is necessary rather than having all of those extra features. And this would only last a couple of days, but within those couple of days, nobody gets paid until they go back to work and the shutdown ends. So we can see here, shutdowns can be disruptive. We've seen these before, leading to delays in, I've just pressed the space button and lost us. Here we go, leading to delays in processing applications for passports, small business loans, or government benefits, shuttered visitor centres and bathrooms and national parks, all this kind of stuff. The plans are often quite specific. The SEC has said, during the shutdown, employees who have not been designated and expected may not volunteer to work without pay. Such voluntary services are a violation of the Anti-Deficiency Act and will not be permitted under any circumstances. A staff person will be instructed to ensure that at the end of the last day of work with appropriated funds, lights and electronic devices not needed during the shutdown are turned off. So the SEC, the Securities and Exchange Commission, the regulators in the US who have been attacking the cryptocurrency space within the last couple of months have said they would have to go down to a skeleton form essentially during this period of time. Now, obviously, a government shutdown would have a massive effect on the markets, the traditional markets in general, but I want to specifically talk about how this is going to affect the cryptocurrency markets. Now, it's not certain, it's not definite that we are going to see a government shutdown on the 1st of October, but what we are seeing here is the SEC could go down to a skeleton form They could be removing all of those people that are doing that extra work, and they could just be working on what is necessary for a set amount of days. And we have actually heard from Gensler saying the US government shutdown would reduce SEC to skeleton crew. So the SEC could stop processing applications if the US government enters a partial shutdown, which would likely include crypto ETF proposals. Now, it seems typical like something like this is taking place. We are seeing potentially the risk of a government shutdown, and Gary Gensler's taking the opportunity to maybe push the ETF applications deadlines back. So Gary Gensler, chair of the SEC, told Bloomberg yesterday that a government shutdown could hinder his agency. Again, we don't know how long this would last, but it wouldn't last very long. It would last a matter of days, I believe. And what we could see here is he has said the public should understand that we will largely be a skeletal staff, so the normal oversight we have on markets will not be possible for however many days a shutdown happens. So Gensler said that during a shutdown, the SEC would be unable to review filings from companies that aim to go public and other applications. He also said the SEC might not be able to oversee markets if a significant event occurs, though he acknowledged that markets would likely continue to operate normally without the usual level of oversight. So similar issues occurred in late 2018 and early 2019 when the US government shut down for 35 days, which limited SEC operations and left it with a backlog. Now, shutdown could affect the SEC's crypto activities. We've seen the SEC, as I said, targeting the cryptocurrency space a lot recently. What we are seeing here is the SEC is expected to take decisions on several Bitcoin ETFs in mid-October. Although the agency may postpone those deadlines outside of a shutdown makes delays virtually certain. So what we see here with spot Bitcoin ETF applications is they all basically got applied at around the same time. It was a matter of within 2 weeks, we saw 7 applications. And with these applications, the SEC gets 3 days. Now they can delay the application twice, but then on the third deadline, that is the final deadline, and they need to make a decision by that point. Now, we've already seen them delay the application decision once. They have a second opportunity to do so in mid-October, but if they delay it again, they have to make a decision by the start around March 2024 for the majority of these applications. Now, with a government shutdown, and with the SEC having to stop some of its staff from working for a set amount of days, as you can see here, it could be 35 days, it could be longer, it could be shorter. They're going to have a backlog of work there, so it's looking even more likely that we could see a delay in the spot Bitcoin ETFs once again. So reduced staff could limit the SEC's capacity to launch new investigations and lawsuits, which some people could be seeing as a positive thing. But I do believe anyway, I know this is a really unfortunate situation here, but I do believe they were going to delay these ETFs anyway. So overall, could this be a net positive for the cryptocurrency space? If they were going to do the negative thing anyway and delay the ETFs, at least we could see a limit to the amount of damage the SEC could do to the cryptocurrency space within the next couple of months. Let's see what else is going on in the cryptocurrency news here. We have Grayscale files for an Ethereum futures ETF. So Grayscale have just won their lawsuit against the SEC earlier this month, and we are now seeing them apply for an Ethereum futures ETF, and they have said, according to the sponsor, the trust seeks to maintain its holdings in Ether futures contracts with a roughly constant expiration profile. So Grayscale added, the trust will endeavor to trade Ethereum future contracts so that the trust's average daily tracking error against the benchmark will be less than 10% over any period of 30 trading days. In other words, these ETFs offer identical exposure to that of the trust. Therefore, the sponsor believes that if the commission allows these ETFs to begin trading, then it should approve the trust for trading. So Grayscale are using the methodology, that was the word I was looking for, of which they have won the lawsuit with in earlier September, and applying that to Ethereum now as well. I think we're going to see a huge bunch of these coming through now because we have seen the SEC lose that lawsuit. As the days are ticking by, we are getting closer to the SEC not being able to appeal that lawsuit. So the SEC has 45 days to appeal a lawsuit. As of yet, they have not done so, but the Grayscale essentially just need to sit on their hands and hope that the SEC don't do anything about that. And then once the 45 days are over, Grayscale can begin reapplying for a spot Bitcoin ETF, and they are obviously trying to get ahead of the game and start applying for Ethereum futures ETFs as well. So big wins here for the cryptocurrency space. Let's see what else is going on here Mt. Gox repayment deadline has been delayed until October 2024. Now, we did discuss yesterday that there were rumours about this, and that could have been why we were seeing some bullish movements in the markets yesterday. Mt. Gox repayments is seen as a negative thing for the cryptocurrency space. What we are seeing here is Mt. Gox, a cryptocurrency exchange that went offline mysteriously many years ago, has said that they are going to repay those customers that lost access to their Bitcoin. Now, I believe, let's Google, when did Mt. Gox go offline? When did Mt. Gox go offline? Because I keep getting this mixed up. February 2014. I think that's what I said in yesterday's live stream. So Mt. Gox suspended all trading, and hours later it went offline. So they had 744,000 Bitcoin, and they lost them in a theft which went undetected for years. So what we're seeing here is those users that had stored their Bitcoin on the centralized exchange Mt. Gox are getting repaid, and they are getting their Bitcoin back. Obviously, it's a big win for those users, but there was a huge amount of Bitcoin that now needs to be repaid. These people are in significant profit. They lost their Bitcoin in 2014. It's now 2023. We've seen big bull markets since then. So these people may choose to just sell their Bitcoin into the markets, and that is why the repayment deadline is creating some selling pressure. Now, this was expected to be in October the 31st, 2023, and that was when Mt. Gox were going to give all of that Bitcoin back, and we could be seeing some selling pressure from those users who have received their Bitcoin and got access to their Bitcoin for the first time in 9 years. But that deadline has been delayed for one entire year to the 31st of October 2024. So we are now not seeing the fears surrounding the selling pressure that could come from that repayment. Therefore, the price of Bitcoin was moving quite nicely to the upside, but this has been rumored for the last couple of days. So we're seeing a bit of a buy the rumor, sell the news event here. People knew this was coming. This is still positive news, though. We're not going to see a huge amount of cryptocurrency being dumped onto the markets on the 31st of October. And I would also like to add that I believe the fear of this being dumped is causing a bigger effect on the prices than the actual dumping of these assets. We've seen this over and over again. We saw it when the US government were dumping their Bitcoin. They said we've already dumped some and we're going to dump some more, and everyone started selling their Bitcoin, even though the first date that they dumped it, it didn't really have an effect on the market. In fact, the day closed green on that event. So the fear of selling pressure usually causes a bigger dump than the actual selling pressure. We see that over and over again. So we could be seeing this here again. We are going to see these people, it's a really tough debate here. Well, the majority of the people that were in around 2014 that bought Bitcoin and used Mt. Gox want to sell their Bitcoin now that they've watched the price soar over the last 9 years, or will they want to hold on to it because they've seen these cycles, they know how it works, and they believe there'll be another bull market? They've seen that their Bitcoin was worth X amount when Bitcoin was up at $70,000, so don't they want to wait for it to go back up to those levels? It's all a big debate there. It could actually, the people that actually get refunded from Mt. Gox may be hodlers. They may realize that since they've been forced to be diamond-handed, they should continue in that manner. If, in any case, the majority of them did presume that they weren't going to get access to those funds back anyway, so it's just an extra gain if they hold on to it for a period of time, but it'll be interesting. Let's see what else is going on in the cryptocurrency news. First of all, the Fed announces no change to interest rates. This news came through yesterday. It is a common belief that we are going to see a 25 basis point hike at some point in this year. We do not know when that is going to be or if that is going to happen, but we have seen so far no change in interest rates, which is a good thing. That's a nice thing to see. Now, the reactions we saw, I believe, is we saw negative on the stock market. We saw the DXY increase, but overall, we don't want to see high interest rates for the markets. That's not what we want to see. So seeing no change is important. They are still on a mission to get the inflation data, the inflation rate down to 2% year on year. We are not yet near that. Inflation is in fact increasing. So we do have to expect to see these interest rates continue to be high for a longer period now. Let's see what else is going on though in the crypto news. Before I forget, please don't forget to like, subscribe and hit that bell notification button so you don't miss the latest cryptocurrency news, and make sure to go to cryptosavingexpert.com and check out the CSC Plus memberships that we have launched just last week. Let's see what's going on here. Coinbase sounds the alarm on the centralization of Zcash mining. So ZEC into Coinbase will require 110 confirmations due to a single mining pool now controlling 53.8% of the Zcash network hash rate. The crypto exchange has also disabled market orders of the digital asset. So the largest crypto exchange in the US, Coinbase, has taken preventative measures after noting that a single Zcash mining pool now controls around 54% of the network's hash rate. Recently, we discovered that a single mining pool via BTC controls more than 51% of Zcash's network hash power. As a result, the exchange now requires Zcash deposits to undergo 110 block confirmations. So essentially what this means is your transaction will be processed, it will be put into the blockchain, and they want to see 110 blocks being added onto the blockchain after the block that contains your transaction before that is a fully confirmed transaction. So this will reduce the risk of double spending or fraudulent transactions. So double spending is when you spend the same token twice, and fraudulent transactions, obviously, that covers a wide range of things. So this in turn increases the transaction time for each deposit from 40 minutes to 2.5 hours. In addition, the exchange has turned off market orders of Zcash. Only limit orders are allowed to prevent situations of significant volatility. So Coinbase has engaged the electric coin company to distribute mining. Is Zcash allure fading? So via BTC controlling over 51% of the Zcash network hash rate could mean that ZEC miners could shift their attention to other profitable proof of work coins. Now, nobody wants to see over 51% of a proof of work coin of a proof of work network being controlled by one mining company. This is a real concern here for the network. If you have over 51% of a network's power, then you have control over the network. I'm sure many of you know what a 51% attack is, but basically blockchains work on on consensus algorithms, and if you have over 51% of the network, you can create consensus just with one party. So that is a centralized network. So if you want more information on that, check out this article here. If you are a Zcash holder, I would definitely take the time to do a little bit more research into this, and hopefully they distribute that mining power over the next couple of weeks, because that is a big concern there. Let's see what else is going on here. Let's see how Zcash as the price of the token has responded to this news. Let's search for that on cryptosavingexpert.com. If we go to Zcash here, you can see it's down ever so slightly, just below 1% here. It is down pretty significantly since the top of the bull market. At the top of the bull market, we were looking at a $386 token, and now we're looking down at $25. It is still around the lowest it's been during this bear market. So a very, very big fall for Zcash. We'll keep an eye on that. Because this news is pretty frightening, and it's not something you hear every day for a major token like that. Let's see what else is going on in the cryptocurrency news. Before I forget, please don't forget to like, subscribe, and hit that bell notification button so you don't miss the latest cryptocurrency news. What we have here is Optimism Foundation sells 116 million OP tokens in planned selling events. So the Optimism Foundation has sold 116 million tokens worth $157 million in what is described as a planned selling event. So they've sold a huge amount of their tokens there into the markets. The sale, described as a private and planned event, sourced tokens from an unallocated portion of the OP token treasury. The foundation's treasury remains at a valuation of approximately $1.25 billion, exclusively consisting of its native token, according to data from DeFi Llama. Let's take a look at the price of OP as well then. Let's see what's going on there. OP on search. If we take a look at the coin section here, you can see Optimism. So how much did they sell? They sold $116 million, 116 million tokens worth $157 million. Their market cap is just over $1 billion. So if we take a look at that, well, what valuation did I just say? 157 million. That's a pretty significant chunk. What we can see here is this has caused some selling pressure. As expected, this is going to dump the markets. What we have here is a move of 5.7% to the downside. What I would like to say is, yes, this does not look good. The foundation not wanting to hold on to their token isn't too great. However, we never want to see one party having the power to dump the markets like this. This is always the thing of like, it's a bit bittersweet here, because when the foundation is selling their tokens, it makes it spread the tokens out into the community. We don't want to see the founders of a project holding 90% of a supply, because it just means they can dump at any second and just take the liquidity out of the market. So the sooner they kind of spread that and diversify that into the markets, the better for the long term of the project, I believe. Let's check in with the chat. Aru says, hold on, what? Zcash got centralized. Essentially what is happening here is we are seeing centralization of Zcash, because 53.8% of the mining power now comes from one single mining pool. Now Coinbase have flagged this and said this is a concern. This is a proof of work network. If over 51% of the network power is generated from one mining pool, they can create consensus on their own. Blockchains that work on proof of work is a consensus mechanism, and to create consensus you need over 51% of the network, and one single mining pool has got that. So it is a slight concern, something to be aware of. As we just checked in with though, it hasn't really affected the price of Zcash that much in the open markets, but we do need to be aware of this. We need to be incredibly careful just with your transactions and such. We have seen that Coinbase have taken measures to protect themselves. They have increased the amount of block confirmations required for a Zcash transaction to 110, which essentially means when you create a transaction on the Zcash network, your transaction will be in a block, but Coinbase won't confirm that transaction until 110 blocks have been added to the blockchain after the block that contains your transaction. So this has increased the confirmation time from 40 minutes to around 2.5 minutes for transactions on the Coinbase network. And we are also seeing that this could reduce the fears of double spending, so when you spend the same tokens twice, or fraudulent transactions there. So if you want more information on that, check out the link. I think I've dropped the link to this in the chart already, but you can have it again just in case. There you go. Also, please don't forget to like, subscribe, and hit that bell notification button so you don't miss the latest cryptocurrency news. Please let me know if today's stream is all clear and working. It's looking a bit pixelated on my end, but I don't know if that's just the interface for YouTube being a bit funny today. It's not been treating me nice the last week or so. Let's see what else is going on here, though. On to the last article of the day. The Bitcoin network congestion continues. 462,000 unconfirmed transactions. Yes, we are still seeing problems with this. The Bitcoin network is suffering a massive backlog of transactions here. A huge amount of transactions that are still waiting to be confirmed and broadcast and put into a block, essentially. So we are seeing here, this is the highest block fullness in history. We are seeing ordinals surpass 32 million in inscriptions. Bitcoin ordinals have taken the network by storm earlier this year, introducing inscription NFTs on Bitcoin. They caused a huge spike in transaction fees. They caused a huge spike in transaction speeds. We are seeing that slowly reduce, but we are still seeing a huge congestion. I mean, we're seeing the hype around Bitcoin ordinals reduce, but we are still seeing congestion continue on the network. This is why we have layer 2 solutions, like the Lightning Network. We are building on this. This isn't just the end of Bitcoin because we have problems like this. Layer 2s are exactly what we need here, and we are still seeing the development of that and still seeing that being pushed forwards. But now let's take a look at the price of Bitcoin. Let's see what's going on here. We are seeing a slight move to the downside here. We are at $26,730. I did see Jason Smith said today, what is the Fear and Greed Index doing? Let's pull that up and see what's going on today. So Fear and Greed Index, let's get that up. So if, it's gone already. Where did it go? Fear and Greed Index. Here we go. Let's get that in there. So I like to use the alternative.me one. Looking pretty neutral at 47. If it's any lower, then it becomes fearful. But you can see here we've been pretty neutral for the last couple of days. Haven't seen too much fluctuation in that. You can see we are moving to the downside. We do actually, if we go to the daily chart, I believe have a massive level of resistance that we aren't able to break through at this point in time. Let's do the support first. So I'm looking at these levels of support, and I'm looking at these levels of support because if we take what's happened, let's zoom in some more here. If we take what's happened back here, you can see February, we use this level as a resistance here as well, and now a support. So I'm looking at the $24,860 level to the $25,150 level as a level of support. I suppose you could drag drag this even a tiny bit further down. And then we have some levels of resistance to be watching out for as well. I'm looking at these points here specifically between the $28,000 and the $28,500 level. And we have just seen a move to the downside as well. I believe if we go to the reset price chart here, you can see that we were kind of forming this level of resistance down here and this level of support, which was from, I would take this from here to here to here. In fact, I would probably just go from there to there to there. So you can see here, we were in this triangle shaped formation and we have unfortunately seen a breakdown. No matter what way you look at this, we have seen a breakdown right now. So we could be in for a little bit more sideways action. Hopefully we get a rebalance of one of these resistances and then we could be coming back up to retest that $26,900 level or the $27,000 level. And if we do and we get rejected from them, then we could be coming back down to that original range, which we've been trading in for a while, which is around that $26,450 level to that $25,550 level. That's what I'm looking at right now anyway. But I think that's all we have for today's stream. If you have any more questions, make sure to check back in tomorrow. Fire them all in the live chat and we'll go through them all. But thank you very much for watching. I hope you have enjoyed and I will see you all back here tomorrow with another cryptocurrency news update. Goodbye.